Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, December 4th, 2020. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Before we begin, I do want to remind you that I will be hosting a live 5-day premium boot camp that begins next Monday. We will be hosting it in our trading room here. It is free for premium members. You can go to pivotboss.com/bootcamp 2020. It'll bring you up to this page and you'll see a schedule of our program. We'll have a 5-day live boot camp that begins at 11 a.m. Central each day. It will go about an hour or as long as we need to go there for that lunchtime period. If you cannot make it live, then these sessions will be recorded. You also get the indicators and tools that are along with it in addition to other training. So this is free for premium members. If you're not a premium member, it's just $49.50 to attend. It's usually $99 a month. We're getting 50% off this month here. You're going to see $49.50 and you'll have access to the trading room for the entire month, and including all of the various things that come along with the trading room. 24-hour chat room access, live trading room, push notification trade alerts, live screen share with audio, PivotBoss proprietary indicators and tools, and it also includes on-demand training, which is our 10-part executive training series and our 5-part signature setup series. All of that for just $49.50. That's a significant value there, and you'll be a part of our 5-day live premium boot camp next week. So again, please check it out. Go to pivotboss.com/bootcamp 2020. Looking forward to seeing you all next week. All right, let's take a look here at the market. Non-farm payrolls just came out right now at 245,000, down from the estimated 469K. Initially, we saw a drive lower and a sharp reaction back up, but still we're inside day to the previous session's range. Previous session's range very, very narrow. Today's range so far, 34% of ADR for the ES. The NQ's trading at 26% of ADR. So we're trading very, very narrow still, and still holding right at these previous month's highs. That blue line right there is very, very important, and you can see how prices just kind of held at this zone. Normally, I mentioned that whenever price comes into this zone early in the month, there's a tendency to reject quickly for a return downward, and perhaps you progress higher. Right now, we're not really turning down. As a matter of fact, it continues to look bullish overall. Every pullback we've seen, every morning pullback, every afternoon pullback has been bought for a push higher. So right now, we're very, very close to either seeing a major expansive move to the upside or some sort of major rejection that could pull us back some degree here, perhaps in the 35.11s. So right now, again, very, very narrow price action. At the moment, we are developing a strong low in the 60-minute time frame, which could suggest more upside to come. Above 3680 opens up 3700 for the first time. Again, continue to watch this. As this thing continues in this uptrending market, even if we were to drop down, say as low as 3650, it could still be an opportunity to defend and return this thing higher toward 3700. Let's take a look now at the NQ. NQ again trading 26% of average range right now. Look at this narrow range that was yesterday's range right there. It traded exactly 50%. Today we are trading right around the middle portion of that range, trading 26% of ADR. The range today is 46.5 points so far. That is teeny tiny compared to what we've seen here over the last few months. Again, this range is developing above the previous month's high price and above the key range high at the moment. So we have a very narrow range that's developed above those levels. It's also developed above the previous week's close price. So again, this market remains at these highs, but is not necessarily pushing higher just yet. So again, there is the potential to see a bull trap up here before we pull back some degree. Overall, this market remains very bullish. The PIMA trigger zone continues to rise. So I would say any pullback, even into 12.3, could still be a buying opportunity for continuation higher until proven otherwise. So right now, the early level to watch for some weakness would be 12.4 here. That would be a big breakdown because we could drop in the 12.4 and still be a short-term buy. That's how bullish this market has been. So we'll continue to see here if this market gets a little dose of volatility here pretty soon. Looking at crude oil now, crude oil is higher today by 1%. It has traded to a new high. At the moment, we're seeing a little bit of a pullback on the intraday off of the highs, but a 60-minute buy signal is developing with about 19 minutes to go in the hour. So again, if that buy signal solidifies, if we finish above 46s here, that could lead to several hours of strength ahead. So this could be a continuation higher toward 47s. One thing we talked about before was how strong this trend was. We mentioned that 44 was the important level here, and if price could defend and hold 44s, we have a shot to rally about 4.7 points higher. That would take us into the 47.70s, and that was all from a range that we developed yesterday. Again, we can go over here to the 6-day range right here. Click OK, and this will quantify that range for us right there. You can see 4.7 points is the expansion target from this low. 44 plus 4.7 gives you about 48.70. So we still have more upside here over the course of the next several days. Again, right now pulling back on the intraday, but seeing a nice little intraday rejection that could lead to more strength the rest of the session. All right, let's take a look here at gold futures. Gold right now is trading higher. It's up just a little bit off of yesterday's close, but for the most part, what you're seeing here is a good reaction to those 1760s. It pushed back above 1800, back above the 200 period average, and is held. The first target we talked about was the 1850 level. We've now gotten that level. Today's high 51.80. Secondary target could be as high as 1870, 1875. You have the midpoint right in this area as well. That's just shy of the 1870s. So again, we could see a nice little continuation here. But once we get there, what's going to happen? That's the big question here, because once we get to that level, we have seen a lower value relationship play out. We have another one this month. This is the midpoint of last month's range. We could get as high as that zone, as we mentioned, 1870-ish, 1868s, and then begin to see weakness that could take us down another leg, at least to retest the recent low. We've been in a downtrending market. Any major pop has been sold. Right now we are bouncing, which is something we talked about. Can it bounce off the 1760s, 1770s, because there may be a 100-handle bounce. But once that happens, what happens after that? So right now we are seeing a very good continuation of our initial idea, but we are coming into a point where we may begin to see opposing forces come into play. As a matter of fact, the 60-minute chart right now showing signs of weakness with a 60-minute sell signal developing. Again, about 17 minutes until that finishes, so we'll see how that develops. Overall, this market remains bullish, but approaching overhead resistance. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Happy Friday, everyone. Please be sure to like, share, and subscribe. And again, looking forward to seeing you in our live boot camp next week. Take care, trade well, and I'll see you in the trading room.